Good morning, good afternoon, good evening, wherever you are in the world. We are delighted to welcome you to this FS Club webinar on the increasingly important subject of revving up, how the digitalisation of trade and trade finance is accelerating. And we'll be conducting the webinar in the usual manner, but we're using the Zoom platform today. So can I ask that you register questions using the Q&A function on Zoom, because the chat is disabled. And that will be the way that we can record your question and pass it on to John and to Chris. So I'm Hugh Morris. I'm Senior Research Partner with Zien Group. And of course, we would not be able to run this series of webinars were it not for our sponsors, to whom we are profoundly grateful that they enable us to run a broad, wide and deep range of subjects across the spectrum of finance and bring those to the attention of those who have been kind enough to attend today. So the agenda for today will follow our standard format. I will get out of the way as fast as possible. Then I will hand over to John Taylor, who is Professor of Finance and Trade Law at Queen Mary at the University of London, who will be followed by Chris Southworth, Secretary General of the ICC UK, and we will then go into question and answer mode. So, without further ado, it is my great pleasure to introduce, speaking first, John Taylor, Professor of International Finance and Trade Law, Queen Mary, University of London. John, over to you, sir.
Oh, thank you very much, Hugh. And it is indeed a great pleasure for me to address you all. I will run very briefly through some of the legal aspects involved with accelerating the digitalisation of both trade and trade finance. We necessarily have to keep this short. So if we could move, please, to the next slide. As you would expect, in an ideal world, as this slide indicates, and incidentally, all of these slides I understand would be available after the presentation. So I'm not going to speak or read the slides specifically, but rather just speak to them. What we want, though, in an ideal world for trade to work seamlessly around the globe is that the law underpinning it should support all aspects of commerce undertaken, and that support should extend even to commerce undertaken in electronic form, especially nowadays. That means, of course, that if you have trade and trade finance in electronic form, not paper form, you want it to be legally enforceable, whether you're looking at reliable communications, at signatures, at contracts, and more particularly at payments for the trade. And you also want this, the law to provide cross-border use and recognition of all electronic aspects of international trade and trade finance. There are many precedents in the law that can encourage this, including, of course, wonderful work that the United Nations Commission on International Trade Law has been undertaking for, in some cases, more than 30 years. There are model laws or United Nations conventions that can help greatly in this respect. So if we move to the next slide, that's what is ideal. The problem that has confronted trade and trade finance is rather ironic. The law on this topic traditionally around the world dates back to the 19th century. And quite not surprisingly, the solution that they found to ensure trustworthy trade and trade finance documents was to ensure that those documents should be in paper form and physically signed by whoever should be signing the documents. Indeed, it was basically the practice became that very important documents in trade and trade finance, and those are the documents indicated in red on this slide in the first bullet point: promissory notes, bills of exchange, insurance documents, bills of lading, and shipping documents. Many of these have to be by law in paper form, because those documents were very special documents. They give the right of the person to the person who holds the document, has possession of the documents, of a piece of paper. It gives the right to those persons to claim the performance of the obligation that was embodied in the document. So if it was a promissory note, it would be an obligation to make payment or to collect the payment to the person holding the document. Or if it was a shipping document, like a bill of lading, it gave the right of the person who held the document the right to obtain the goods off the ship. Very good. These documents many of them are so-called negotiable instruments. So it enabled finance to be readily obtained by negotiating the documents. The law, though, in virtually all countries said that if the information in those documents was in digital form, not in paper form, in digital form, it wasn't possible to possess. You can possess the paper and hold it in your hand, as I'm showing here, but of course you can't possess something in a digital form, electronic information in a digital form. The good news, however, is that the laws are changing, and particularly this is thanks to the alignment with a model law that UNCITRAL, the UN Commission on International Trade Law, set forth in 2017 and recommended, and the United Nations recommended that all countries should adopt that law or its principles into their own domestic law. And the good news is that this is happening. So if I may have the next slide, please. So what does this MOLITA, Model Law on Electronic Transferable Records, do? Well, I'm not going to go in detail through this, but very simply what it does is it says that if you have in the electronic form something which is equivalent to a paper-based form, the law, if it's passed, will ensure that the electronic form will prevail just as much in law as if it was in paper form. I mean, it's very simple, frankly. The theory is very simple. All it provides is that in law, if the information contained in the electronic record is the same as what would be required in paper, then the same legal effect should be given to it. It provides various elements that I've indicated in this slide here, that of course, the information must identify what the obligation is, whether it's a payment obligation or a payment to get the goods. It must be clearly indicated in the electronic record. And then it must indicate that the record is transferable. It can be passed from one person to another. And it does this by, it overcomes the possession issue by saying, so long as a person has exclusive control over that electronic record, so long as you have a key that gives you the right to that record, then that electronic record is the equivalent of the paper document. And you're deemed to have possession. This is under the model law. You're deemed to have possession because you have exclusive control over that electronic record. Of course, all of you would be saying, but you know, electronic records can be hacked, they can be unreliable, etc. Well, of course, we all know that. And therefore the law requires, this model law would require that there be a reliable method used to record the data that you are speaking of, to record the electronic promissory note or electronic bill of lading, etc., has to be by a reliable method judged against a set of standards. And the reliable method today seems to be through the use of blockchain. Interestingly, of course, blockchain can be misused, but the reliable method of blockchain enables, therefore, that you can trace the origin of the document right back to its beginning. And if you can't trace it properly, then you cannot necessarily rely upon that record being reliable. The other important aspect of this model law is that also it says that if electronic transferable records have been issued or used abroad, they should be given respect by the local law. In other words, that the fact that it's a foreign electronic record and not a locally generated electronic record should make no difference to its enforceability. So these principles are really embodying the fact that then the electronic record is the equivalent of the paper record that used to, or now it does not supplant the paper record. The two things can exist side by side. In other words, you can have a paper record and you can have an electronic record. But if you have one, you can't have the same one in two forms, or it would then confuse the obligations and who is obliged under them. Fortunately, the laws of several countries now are aligned to these Melita principles. And what is the big challenge now is to ensure the alignment of many other countries. We could move on. Thank you. Here's a very brief snapshot of where countries stand in those that are formally aligned to these Melita principles. Even if they haven't taken the exact wording, they've taken the principles that were involved in the model law on electronic transferable records. And you'll see a number of countries in this on the left-hand slide aligned. Many of them, surprisingly enough, are very small countries. Some of them from Pacific states in the Pacific Ocean. But key countries that are aligned are, of course, Singapore, quite early adopter, United Arab Emirates through their entity are aligned, and most importantly, the United Kingdom. Now, English law is aligned because last year legislation was passed, and the United Kingdom was the first G7 country to adopt a law consistent with Melita principles. And all other G7 nations have, in one form or another, agreed to do likewise. Under the right-hand side, you'll see that reform is in progress in many important countries. And the most recent developments are that in France, just last month, legislation was introduced into the French National Assembly, that if passed, and the expectation it would also bring France into full alignment with Melita during this year. Germany is well underway, Japan as well. The United States, they are passing laws at state levels, and the most important state in this context of international trade is New York State, still awaiting legislative consideration, which now probably may not occur until late this year or early next year. Incidentally, the United Kingdom is so important, or English law is so important, because as you probably know, almost 75% of international trade is governed by documents under English law. So that's why the United Kingdom is such an important country in this context, that the law has changed. Really hot news that Chris will also discuss is that the Commonwealth countries and ASEAN countries now are making a huge effort. 60 economies in all are making a huge effort to have alignment in place by the end of 2026. So things are really moving, as the title to our webinar today indicates. And then finally, on my final slide, thank you very much. If you need further information about any of what I've discussed in very brief detail, please have a look at these links. Two of the links were prepared by myself and my colleague in our small company Castle, and the last link, importantly, is a link from the ICC, C4DTI, Chris's enterprise, that is really showing the need for potential and the need and the potential for trade digitalization, which has been so long required to make trade efficient and economical. And on that, Chris will speak to us, and I'm very pleased to hand over to him.
Thanks very much, John, and it's great to come and speak to you. I see some familiar names in the audience here, so apologies to those who've heard me say some of this before, but I'll just give a sort of bit of a canter through what some of the business benefits are, what some of the challenges are that we're facing now in terms of implementation, in the UK's case of the Electronic Trade Documents Act, but actually more broadly, globally, what are the challenges that we're up against, and then what some of the priorities are that we're really focusing in on. The good news for all of you is finance is top of the list there, so I'll come back to that shortly. So the recent report we published was just on the link that John showed on his previous slide, Seizing the Moment. That was published in November. The purpose of that report was quite straightforward. We wanted action day one when the law changed in the UK, the Electronic Trade Documents Act, on the 20th of September. And then we wanted to follow that quickly with some clear, demonstrable case studies of what does that actually look like in progress as quickly as we possibly could. And then with that, share some insights on some of the lessons learned throughout that process. That's what the report was intended to do. I'll come back to case studies because there will be more coming. But I think what we immediately saw, and bear in mind when we changed the law, we had a broad idea of what was going to happen, but actually what we saw happening was absolutely beyond our expectations. In the report are 16 case studies, mostly trade, but there's also non-trade examples here, which is important from a finance point of view. There are other applications of this legal framework that go far beyond trade and into domestic economic growth. So I don't think we've explored the full span of applications yet. I think there's lots of opportunities for innovation there, but I'll focus for the purpose of this on the trade side. So we had 16 case studies. There was a range of different jurisdictions, all using English law, different sectors from fruit, engineering, construction, oil, retail, different company sizes, SMEs, all the way up to the big guys, tier ones, the multinationals. So a real range. I'll pick out two case studies because I talk about these a lot because I think they just really illustrate the point. What we asked is not a full implementation of the whole legal framework. What we were saying is let's just focus on key documents in digital form. So one of the case studies was Melon & Co. They are a melon importer into the UK, 65,000 hectares of melons in northern Brazil. Obviously, melons, perishable fruit. Their priority is to get speed over the borders, get those melons onto the supermarket shelves as quickly as possible. They decided to use an electronic bill of lading versus a physical bill of lading. And in the process, stripped out so much inefficiency, they were 15% more profitable. That's one SME. And then all the additional benefits, which in many ways are more in terms of that speed over the border for the perishable sector. And I'll come back to that in terms of France, because this is going to be a big one in terms of European fruit and veg coming into the UK and the opportunity that presents for all of us in the UK. Second example was another sugar importer buying sugar in Nicaragua, importing it into the UK. They tested the use of an electronic bill of exchange. That typical transaction takes 2, 3, 4 weeks. They transacted in an hour. And so quickly, they were able to then buy a second shipment of goods or sugar in the normal time that they would have had one transaction and one shipment. In other words, they doubled their trade flow. Two great examples, both SMEs, both tremendous benefits, both way beyond the expectations we had. But it wasn't just that. There are examples of just transactions in minutes, not months and weeks, which is the sort of typical norm. Reductions in shipping costs, 18%. Anyone paying demurrage fees, that obviously has a tremendous benefit. Get those ships into port and out of port and unloaded as quickly as possible, has all sorts of benefits. And then obviously a whole pile of cost reductions, 80% reduction in border waiting times to that speed over the border point. And obviously all that friction of paper that is normally associated and everybody complains about, all removed. You can see those case studies in the report. I won't go into any more detail, but they are tremendous. They break down to, I would put it into sort of 3 buckets. Firstly, finance. What does this mean for finance? From our perspective, this is all about cash control and management. Anyone sitting in a corporate treasury who wants to mobilize money quickly, doesn't want money sitting in different parts of the world or different accounts waiting. They just want that cash control. You can see how faster transactions would be tremendously helpful to that process. Risk reduction is a big one from a finance perspective. An awful lot of risk sits in that trade system, whether it's loss, damage, delay, fraud, all sorts of areas that we don't probably talk about enough. This is one tool, one way of reducing some of that friction, risk. And then for any company looking for liquidity, obviously this is a great way of moving money and improving liquidity and access to trade finance, which was actually in the original business cases we published in 2021. All of that's evidenced in these case studies. The second bucket sort of broadly fits into compliance, and I'm going to put sustainability into that bucket too, in terms of, in terms of reporting. You know, once you get off the paper, you move into a data world. The whole process becomes a lot simpler. You get much more accurate data on really key areas within your global supply chain, whether that's where the goods are coming from, who owns the goods, who's paying for the goods, where are the goods. A lot of that information is locked up in paper-based processes and really difficult to aggregate up and also integrate with your ESG data to give you far more transparency and management control over your global supply chains. And obviously that pressure is growing as the pressure mounts on sustainability, resilience, and addressing some of the geopolitical risks in the system. And then I'll just give you a couple of examples where I think we were shown, the whole world was shown, what happens in terms of just how fragile the system is. One was during COVID, when the UK ships had left the southern ports heading out to the east. And then 3 weeks later, we all saw images of ships all sitting in the Singapore harbour. Why were they sitting there? Because the goods couldn't be unloaded, loaded, or addressed, and all the paperwork was sitting in brown paper envelopes in Heathrow Airport because they had to be on paper and all the airplanes were grounded. That was a very live case all over the newspapers at the time. Probably a lot of us have forgotten about that. That was entirely unnecessary if we'd been operating in a digital environment where that information would have been with the goods, would have been able to transact at the same time, and we would not have had all those following, or at least a lot less of those consequential delays that we were all impacted with for a long time afterwards. And then the other example was the Evergreen ship. We got stuck in the Suez Canal, absolute insurance nightmare. Anyone owning goods on that ship was dealing on a daily basis. Where are they? Are they moving? Are they not? All the supply chain risks that followed. Again, we could have handled that situation a lot better if the information and ownership and transactional data, information was in data form, not paper form and paper-based processes. These are the sorts of risks that we are all dealing with in trade every single day of the week, that all can be reduced over the longer term if we move into this digital environment. So what are the challenges that we're facing? The UK is the largest G7. It's the first G7 country to change the law. As John set out before, English law plays an enormous role in global trade, as we saw in the case studies. You can transact on English law, so it has a tremendous impact. However, there are no other G7 countries to point to in terms of how we implement the law. We have to learn by doing. There are no reference points here. We're all having to do this as we move forward. Eventually, there will be more case studies, more help at hand. But right now, we are right out front. Everybody is watching how we navigate this implementation challenge. Awareness is challenge number one. Just companies are still not aware of the law. They don't know what it means. They don't know what can they do on Monday versus the short to medium, longer term. All of that needs clarification. And until we have more awareness, we won't get the adoption rates to scale up the benefits, which I've just illustrated in the case studies. The second big challenge we have is expectations and commercial scale. Anyone with a big global supply chain, it's complex, multi-jurisdictional usually. You know, to change processes, you need more countries. To John's point, why are we so focused on getting rid of the legal barriers elsewhere in the world? Because that gives us the scale. The main message that we're saying now is we are not expecting to change the world in a day, a year, but what we are saying to everybody now is get started, because there is a familiarization process to happen here where companies just need to test and use these different digital solutions. Without any investment in IT systems, that all comes down the road. But as John set out in terms of what's happening in terms of legal barriers, it's coming at us, and it's coming at us fast. So right now, you can transact digitally through the UK, UAE, out to Singapore. So that's a fair chunk of the maritime Silk route. But by the end of this year, early next year, we'll be transacting or able to transact into France and Germany, two big G7 markets for those of us in the UK on the doorstep. That is a different level of scale altogether. The US, Japan are also here where we can start to transact digitally, and obviously bigger scale markets. And then in 2026, 2027, in come a whole swathe of huge markets across that Commonwealth ASEAN network. And with that, by the way, comes more. China, 2025, we're expecting another big market. They're busy removing legal barriers or scoping out how to do that. So these bigger countries are coming. The place to start is at a very simple level, I think. So in terms of our priorities, we're very focused on corridors. We're very focused on right now drafting an implementation roadmap so that all of this information is much more readily available. I'm sure if you're a company in the Midlands or in a region in another part of the world, you probably have no idea what's going on here because the information is quite hard to come by, even for the likes of us in it. We want to make that a lot easier. Set this stuff out in timelines. When are the hard deadlines? When are borders going digital? When are markets changing the law? The shipping sector will be 100% digital. EBLs, electronic bills of lading, by 2030, 25% by 2025 next year. We've already got an example of the minerals and mining sector now starting to operate across the top 9 commodity traders at 60% electronic bills of lading. That's jumped from 2% not that long ago to now 50, 60%. In other words, that group have already hit the tipping point and they are driving this with or without help from anybody. That's a great example of a sector starting to move forward. Our challenge is to now replicate some of that success and build the case in the other big priority sectors, which are food and drink, pharmaceuticals, manufacturing, retail. These are the sectors that ship the highest value and volume of goods around the world. Those are the sectors which will change the global trading system. Everyone else will pretty much follow once those go. And within those sectors, we're really targeting the OEMs, the tier ones, and their supply chains. Because if we target those with the key trade banks, again, we'll get tipping point faster, we'll move the market faster, we'll move the needle, and then we get the widespread adoption where this just becomes the norm. In terms of that broader SME base, our priority is quite simple. We need a lot more guidance, step by step. What can you do on Monday? What can you do 6 months' time? What can you do in a year's time? We need a lot more use cases. We need to keep building the case all the time in different business models, different supply chain models, different sectors, different company sizes for at least the next 2 or 3 years, I think, to show the way. And absolutely priority for us is looking for the early adopters. And like I say, we're not expecting to change the world in a day. What we're looking for is big companies, tier 2 companies as well in there, that are willing and wanting to start to try these new ways of transacting and help us show the rest of the business community what can be done, like we achieved in the first round of case studies. Top priorities are the corporates. We've done a lot of engagement with pretty much every other constituency over the last few years, but it's the corporates, it's the buyers, the sellers, the cargo owners who drive the trading system. Pretty much everybody else is serving those 2 constituencies. So in terms of our big priority is we must engage much more with that corporate community, whether it's corporate treasurers or supply chain managers, and all take a step back to some degree and walk forward with that community with us. They're not in the same space as us. It's very fragmented within corporates. That's one thing we discovered in the recent report, is that internal environment needs a lot of careful thinking through. Who do we target? Who's the audience? Who are the key teams in order to support that corporate community and to manage those expectations, I think is absolutely vital. So there you have it, a pretty quick canter through, but I think I covered most of the bases there. I'm very keen to kind of answer questions if you have them, but I think this audience is absolutely vital to us. We need you like you need us. We're a neutral broker here as the International Chamber of Commerce. That's our role, to try and solve that coordination failure, getting the stakeholders around the table, including government. We can do that. We can provide that honest broker voice, get the guidance out from an impartial perspective. We can do that. Where we need your help is the practical examples, is to help us drive the change through the market, through our clients or your clients and networks. Feed us with the information, because it's in all our interests if we want to benefit to work together. And that's exactly the same message, by the way, we're giving to governments, certainly in the ASEAN last week, where I was, with all of the ASEAN countries, in fact, and the same with the Commonwealth and the same with every other government, is we've got to work together much better and more effectively to get the whole market moving. It doesn't work if one group moves and the others don't. We've got to do this, all of us, moving in some sort of uniform, coordinated way. Thanks very much.
Chris, John, thank you very much indeed for those extremely illuminating remarks. We do have questions. We have some great questions from the audience. Dan Feeney asks, is the World Trade Organization still fit for purpose given increasing geopolitical tensions and the borderlessness of big tech? I don't know who would like to pick that up.
Probably one for me. Well, having come away from the WTO ministerial conference in Abu Dhabi, look, I think the simple answer is the WTO gets a hard time. But the WTO is often misunderstood. You know, the WTO is just a secretariat. It's a member organization. It's the governments who make the decisions. So is it making as much progress as we want it to? No. Why is that? It's simply because of our domestic politics and the rise particularly of populism, nationalism, and governments wanting and needing to feed their domestic voting bases. The US and the UK are great examples of this, but we're far from alone. And that's making it very, very difficult to get any global agreement on pretty much anything right now. So the way to look at the WTO is behind the scenes, there is a terrific amount of good work going on that doesn't get seen and doesn't get acknowledged. But, you know, it's about changing the politics and appreciating the small wins in this kind of current geopolitical environment that we're in. The sad news is this is not going away anytime soon, because it is political, and until the political environment changes, the trade system will be hampered. by the impact of that, and celebrate the small wins, be practical. Too often industry, if we're going to take a critique, go in with a shopping list. It's just completely unrealistic. We've got to be really prioritized. What's the one or two things that we need governments to do, and really focus on that, because we have a much higher chance of success. Trade digitalization, by the way, is not political. There's broad momentum. Nobody's saying no. It's all about the how. That's a great example of where we should put our focus and attention, not going in with a shopping list of everything that we want changed. That's not going to happen. It's not realistic. So lots of great work down there. We've got to get our arms around the WTO and support them. We need that multilateral system for all of us to trade. So it's in our interests that institution functions. They are doing their best, but it's hard because of the domestic politics that we're all involved in.
And perhaps it's John here, if I could simply add, what is most interesting, though, is that progress in the way that Chris has described is moving ahead anyway, notwithstanding the issues at the WTO. The actors, the key actors, traders, shippers, etc., are moving in the right direction, adopting now digitalisation end to end. And they're, in a sense, thinking, well, we'll just wait and see what happens at the WTO level. We're getting on and want to make our trade more efficient, more profitable, etc.
Thank you very much, gentlemen. Douglas Andrews asks, what's the Chinese position regarding UN Citral and the adoption of MLETA? John, perhaps one for you?
Oh, thank you very much. Just very briefly, the information that we have, and it's quite recent information, is that there is support for adoption, but they, like other countries have done, they're at an earlier stage, certainly earlier stage than those that have actually adopted MLETA. And they're in the process of gathering information and just assessing what needs to be done. I think I know of no opposition, though, from the Chinese end, because again, the industry underlying the trade industry does see the benefits of digitalization. But Chris, does this echo what you?
Yeah, no, 100% correct. I mean, I think we're same thing. There's no opposition in China. You know, obviously China's a huge country, just like other big economies. They've got to figure out how to actually do this within their own legal structure. That's what they're doing, to John's point. There's no conceptual disagreement. They are accepting electronic transactions, by the way, under English law. There's no conceptual objection to that whatsoever. And then we're expecting them to have changed the law in 2025, possibly 2026. So they are definitely working on it. The Asia Development Bank has a whole project on it with them, supported by the ICC. Yeah, I think this is one area where there's, you know, we can work perfectly happily with the Chinese. We're all fully aligned, and we don't need to get tangled up with the geopolitics of, you know, US, Europe, China. In fact, I would strongly argue not to get tangled up in that. Just keep it practical, because from a trading base, we all agree this needs to be done.
And they've also reached out, certain entities within China who have influence are reaching out to understand precisely what's happening in the world elsewhere to keep up to date with it. And I know ICC is involved in assisting in the sharing of information that will, we hope, bring China into a line within the time frame that you mentioned, Chris.
Yeah, it's worth noting there's a very strategic relationship between the UK and Singapore right now on trade digitalization. You know, one in the Atlantic, one in the Pacific, very, very aligned on thinking in the future. And we're very consciously working through our respective networks. So Singapore is doing quite a lot with China on the trade digitalization front. It may not all be hitting the news, but there's quite a lot of work going on there, testing systems and processes. And then, you know, we're openly wanting to connect up that trade corridor with the Singapore UK trade corridor and every other trade corridor and slowly bolt on markets. That's the whole plan, and that's the intention. Those conversations are absolutely going on, and probably a lot more sophisticated than people realize. It's very conscious, it's very purposeful, it's very transparent, all working quietly in the background, trying to make this happen.
With actual test cases. I mean, true live transactions. Yeah.
Thank you very much. Obviously, when this sort of process starts, if you're the only person recognizing electronic trade documentation, it's not a very useful position to be. If everyone recognizes it, it's fantastic. To borrow a COVID-19 metaphor, at what point do you think we reach a sufficiently broad acceptance that you can say that herd immunity, as it were, has set in, and that therefore those who haven't adopted this will have to rush to catch up because it just is the way the world becomes?
Yeah, that's such a good question. That's exactly the question I'm asking. I think that's the critical exam question, is how quickly can we get to tipping point, and in how short a period of time can we do it? That's why we're targeting corporates, sectors, key corridors, key markets where the big value volume is, because at that point, the market will start to tip on its own. When will that happen? I think it's hard to predict that, obviously, because there's a lot of unknown here. But I think, you know, we will be talking about a very, very different environment in the end of 2026. That I think I can pretty much guarantee based on the progress that we've already seen. I don't think this will be a gradual adoption implementation. I think it will be exponential. I do take the point that first mover advantage. Is there a first mover advantage? I find that quite challenging looking at the data, because if somebody's offering me 15% more profitability, I would say 100% is a good first mover advantage. But I do take the point that it's hard to do this on your own. Yes. But I think that scale, that environment will definitely change in the next 2 years. And I think, like I say, it's not about flicking a switch, right? You know, this is about right now starting to familiarize ourselves with better ways of trading so that we're ready and fit for purpose when the time comes when we do get scale. And that will take us a couple of years. Other markets, by the way, are very aggressively moving into this space. As I found out in the ASEAN, we're certainly not on our own. That window of opportunity for the UK is much shorter than we think. Yes, we've got great position right now, but there's France, Germany, US, Australia, they're right on our heels wanting this to happen too. So, you know, once that drive comes in with more countries in the next year or so, I just think this will be a very, very different conversation.
And thank you. Sorry, John. I think we've time for just one more question. I'm keen to use the remaining time. Sure. So I think we've got a great question here. So Craig Wilson asks, very interested in the exclusive control element regarding electronic records and documents. I assume this will require platforms, administrators, and each participant, business, bank, shipper, etc., will require a platform, and all platforms will need to speak to each other as the documents flow on their journey. Can the panel expand on how this works currently and how they see it working in the future?
Perhaps I could very briefly say you're absolutely correct. One needs to use platforms, and the platforms need to talk to one another. They need to be interoperable. And this is an issue which is being very actively addressed. Chris, you though, I think are even more closely aligned to this.
So this is a great question, because I hear this sometimes coming from companies that, you know, we want one big monster platform. That's not going to happen. Let's be really clear. We're absolutely not going to get China, Europe, US, ASEAN, us all agreeing to a single platform. That's not going to happen. And by the way, we need the custom systems also in part of this, right? So it's not just about B2B, it's B2G, G2B as well. So that's why we're so focused on sort of decentralized interoperability, standards. It's about the data being able to move between platforms and systems in standard form. That can't happen today at the scale that we need it to. That's why the ICC are prioritizing it. We've got to standardize the data so that it can move. That's the answer, interoperability. We've also learned a lot from what's happened in the market on the commercial side over the last year or so with TradeLens, Marco Polo, WeTrade are just some of the examples, Contour. You know, why did they not work? That's really important we learn from it. You know, some of it's legal issues, running into the brick walls of legal barriers, some of it's design issues, some of it's commercial. What we are now all talking about is what we phrase as public utility architecture. We've got to build the foundations of the system on interoperable laws aligned to the Melita framework, interoperable standards, common identity frameworks, you know, common sort of documentary interoperability frameworks that are all trusted, neutral, impartial to governments, impartial to commercial interests. That's the direction that we're going in, because it's the only way this is going to happen at scale. There are just too many barriers and commercial government interests if this is built by any one particular party. That just doesn't work for justifiable reasons. So the likes of the International Chamber of Commerce have a really key role here, to be that neutral, honest broker.
And sadly, we have run out of time. What a great session. I'd like to give thanks particularly to our sponsors who have enabled the conversation. I would very much like to give thanks to John and Chris for their fabulous participation. I would also commend to you forthcoming FS Club events next Monday, next Wednesday, next Thursday, as you can see on the screen. And last, I would very much like to thank the audience for joining us today, and I wish you an extremely good rest of the day or evening, wherever you are in the world. Thank you very much indeed, and goodbye.
Thanks, everybody.
Thank you, everyone.